Morning, traders. Friday, here we are. I've had enough of headlines for 1 week, and we've got a few more to come, and then it's the weekend, and I'm looking forward to it. Morning, Kay. Beers on ice?
Good morning, Ryan. It's Friday. I was just saying in the room. I said it's Friday. It's the day to FUCK everything in the market.
Yeah. Shut it down, pull the plug, and come back on Monday. Yeah, definitely. But we've still got stuff to do, so let's get to it. Plenty of headlines again. Fortunately, I'm not going to be going through the whole shebang of all the tariff stuff. I'll just cut to the chase, I think, with that lot. Anyway, we are 12 days away from the Bank of Japan, and we're starting to get all the pieces dropping, and they're going each way. We've had hawkish, we've had dovish, or less hawkish. Words has dropped a piece saying that inflation risks may stir the Bank of Japan discussion of rate hikes in May. So May is when they're expecting hikes to come. On the other side, Bloomberg sources say that the Bank of Japan is going to lean towards holding their rates at the March meeting. That's the one in 12 days. They said that they see wage talk developments within expectations, but it's said to want to monitor what has gone on so far from the January hike and the developments from US policy. Here we are again, Kay playing the old game. I mean, it's not going to be a real surprise that they may hike in May, hold in March, because they're going to want to see all the wages stuff and whatnot.
Absolutely, and it's also the last month of the fiscal year, as we've been already talking about. I doubt that they would do anything right now. They've done already what they needed to do, I think, for this fiscal year. So that is, I guess, it's a done thing that they don't move this week, or next week, sorry, or the week after.
Yeah.
Whatever, this month. Um, yeah,
You're losing track of it as well.
sorry.
You're losing track of the days as well.
And yeah, I mean, really, I do. So yeah, nothing to expect from the Bank of Japan, but that well, I mean, we see this move in the yen is moving a lot. I mean, the dollar's getting hammered, but the yen crosses are not that obvious right now. So that may be the bit where the yen is not so strong. But
Yeah.
yeah, I think the dollar yen is still, due to the dollar weight, it's still going to be a sell on rallies for now, I guess, unless we get a real stellar US jobs report.
Yeah, absolutely. I don't think it'll be a. I don't think it won't be a rally seller even on that. It's been a rally seller all bloody year.
Mhm.
Yeah, I'm keeping an eye on that 147. We're a bit
Yeah.
close round about the data, so I wouldn't necessarily give it a go before. But I think where we close or where we settle, minutes after the NFP might be a bit of a indication. If we've blasted below it and we're back above it, I don't know, it might give a little nudge. We'll see. It's a Friday.
Mm.
Right, moving on. The Germans, the warnings are coming out thick and fast. The German Banking Association head said German spending plans must be accompanied by far-reaching structural reforms. It's music to Draghi's ears, that line, structural reforms. They say the needed reforms include a cut to bureaucracy and a quicker approval procedure. Without reforms, spending plans will be expensive and short-lived. German Chancellor Scholz, for however long he's left in job, says Germany is preparing to raise defence spending through a change to basic law. And he's also jumped on the bandwagon that the EU needs to change fiscal rules. That may happen because more sources stories saying the EU is planning to explore the long-term reform of its fiscal rules for defence. So getting the ground fertile for the magic money tree to be planted. That German stimulus has got some heavy lifting to do. If we look at this morning's data, German factory orders down 7% month on month. So a bit of a reminder of how crappy things are over there, irrespective of the hopium around this fiscal infrastructure fund, whatever they're digging up. Year on year, factory orders were down 2.6%. Which is slightly better than the down 6.9% previously. The Eurozone, they finished the year on a positive. I say on a positive. Flash growth of 0.9% year on year was upped to 1.2%. So year on year growth 1.2% for the Eurozone. At least it wasn't negative. Small wins. The ECB went and cut 25 pips. As expected, they said that rates are becoming meaningfully less restrictive. And that was a bit of a concession that I'll speak about in a moment. There was one abstention from Hawke Holtzman. As we knew, he'd been building up to something like that in the weeks leading up to the meeting. His comments suggesting that he wasn't in favour of a hike at this meeting, though he didn't have the minerals to vote against a hike. He decided not to vote at all. Lagarde was Lagarde. She waffled on about different seas and oceans at one point, which completely lost me and half the crowd. She turned up in a coat more orange than Donald Trump. And that was probably the highlight of the day overall. However, she did touch on a few of the points going on. Talking about the increased defence and infrastructure spending, she said it's still a work in progress and that it would take a long time to play out, which is basically what we said yesterday on the show. Also got questioned on those yield moves as expected, and she brushed it all under the rug, saying that it was, or looking at the spreads, it was nothing to worry about, even with all the move in yields. So unless they see spreads blowing out, she's not bothered in the slightest. Anything you picked out from Miss Suntan?
Yeah, apart from what you said, she was cautiously optimistic on growth on the back of all those plans. That was the undovish part, or even positive part of it. For the rest, as we expected, a lot of lawyers talk and not really giving us too much. Shall we say that she confirms a pause until clarity comes into markets and regarding tariffs and what's going to happen on this plan. So I guess she gave us that pause, right?
Yeah. Is it a done deal? Well, the sources pieces think it's a done deal anyway, because they were straight out afterwards saying that there's growing chances of a pause in April. They say that policymakers see a growing chance of a pause in the easing cycle at their next meeting before rates start coming down again. They want greater clarity about trade and fiscal policy, according to 4 sources. Also, the term that was put in the statement of being meaningfully less restrictive was a result of a compromise in the lead up to the meeting. Some had wanted the reference to remain being restrictive. Others argued for removing it at all. Again, exactly what we've been talking about on the show previously. We did get forecasts out. Growth, despite her positivity, growth forecasts were cut. 2025, 2026 were both lowered by 2 points to 0.9 and 1.2. CPI forecasts largely unchanged. 2025 came down a pip to 2.2% from 2.3%. So still seeing a bit weaker growth, but inflation probably could say staying a bit stickier on that. Straight after that, traders were cutting their thoughts for further ECB cuts, took them down to 41 basis points. So just under 2 cuts expected by the year end. Nomura, one of those, they only see 1 cut now coming in June for the rest of the year. And obviously, it takes a 300 odd pip rally in the euro to get all the banks changing their forecasts. Bank of America have upped theirs to 115 by the end of the year from 110, and they see the euro at 120 by the end of 2026 from 115, as James said in our room. I think these were one of the mobs calling for parity not so long ago. Shows you what we think about forecasts. I'm not going to go through half the central bank wafflers who got released from the shed after the ECB meeting, but ECB's Vilroy is back on the victory lap, saying we're winning the battle with inflation. Let's see if he's right or not. Right, data yesterday, and look at that. For once, the Challenger layoffs was important. I'm probably the only person who ever talks about this, Kay, month to month, and everyone was jumping on it yesterday. 172,000 was the Challenger numbers, a whopping number, and a lot of people were quick to point out, oh, well, 62,000 of that was government jobs. Okay, fine. Take off that 62,000 and 112,000 or 110,000 is still a whopping great number. Even outside of that, and there was a strong government jobs layoff, but there was also a bigger layoff in retail, over half of that balance of that 110,000. Comments in the report as well. 200,000 government jobs would have shown up in that report had they not been blocked by the courts. So that gives you a bit of scale on what's involved with these government job numbers. 200,000 were in the wings for this report. Also, I said the big job cuts were in retail, and that points to a potential weaker consumer. And really, some of the details in the report had nothing to do with the government, so potential weakness to come. But yeah, Kay, bit of a funny one, that one.
Yeah, and as in the reports, tech is also apparently looking at cutting jobs. It's I don't know it's going to show up today, but we've been talking about those jobs and this employment market for so long, um, and warning our audience like to keep a very close eye on it. And I think over the past couple of those reports we're starting to see, we were wondering when it was going to show up, and it is starting to show up. I think it's important enough, to keep a very close eye on, because it's one of the drivers of I guess the dollar heaviness till yesterday as well.
Yeah, absolutely. And another part of that report as well, which stood out for me, which is something we touched on a while back previously, but these government jobs, it's also causing the cancellation of government contracts.
Yeah.
Okay, so that impacts the private sector. So don't think that government cutting is just restricted to government. There are knock-on effects. There's lots of third-party private firms working with governments, and if they have their business chopped, it's going to have a spillover effect as well. So it could grow into something a bit more than, oh, we've lost 200,000 workers, carry on, move along, nothing to see here. There could be some follow-up impacts from that, Kay.
Yeah, totally. And those ripple effects, they are going to show up in other reports, and you know what? They could show up in those PMIs as well, and I think if they start to turn south, there may be another leg coming in the dollar, but it's gonna take time. In the meantime, we are going to probably yo-yo a bit, but it's clear, and I've been saying it on the last few shows as well. From last week, actually, we're looking for this inflection point in the dollar, and I think we've turned the corner now.
Yeah, absolutely. And the market mood has definitely shifted. Another thing to keep an eye on, we've been talking about it the last couple of months, the trade balance numbers, another big jump further into the deficit, 131 billion from minus 98 billion previously. So that deficit ballooning, as you can see, they're all down to imports. But again, this is probably maybe some tariff front running stuff going on. Jobless claims. I don't know what it's going to take for this number to shock us anymore, but it will happen one day. But jobless claims came down more than expected. Still nothing to see there from that number just yet. Fed's Harker, he's worried about the decline in inflation pressure, saying that that's at risk. It says, with all this uncertainty, we don't want to move quickly. Fed's Wallet doesn't see the case for a March cut, but we could see rates cut after the March meeting. It says there's nothing wrong with forecasts for 2 rate cuts still this year. He's got his jobs break-even rate at near 80 to 100,000, so mirroring what Bostic said before. Bostic was up, and I think he's jumping back on the dovish wagon again. He says the economy is in flux and delayed action risks being too late. He warns that waiting for trends to appear in national data before acting could lead to a delayed policy response. So again, that hints that he might want to get in potentially with cuts ahead of any worsening data. Right, all the tariff shit that's been going on for days and days and days. Long story short, pretty much everything's been delayed to April the 2nd, and it may come on then or it may not come on then. But reciprocal tariffs, i.e. phase 2 tariffs, are still all on the docket for deadline April the 2nd. And I've got to say a big thumbs up to Mr. Lutnick, who I'm going to call Mr. Lovenick now because I love him, because he keeps coming out on my side and giving us all the good news, which is helping my trades. So thumbs up for me, Mr. Lutnick. He says, though, that April 2nd reciprocal tariff rates will start high and then start coming down. So even the tariffs that are coming are getting watered down already. Right, are we over this hump now, Kay? For the tariff thing, at least for this phase 1 stuff, the market's going to probably forget about it for another couple of weeks, and then we do this all again.
One big unknown in here, Ryan. Is Lutnick still going to be there on the 2nd of April, or is he going to get the boot from Trump in the upcoming days? I think this is the only thing we need to wonder right now. Is he talking with the backing of all of them, especially Trump, of course, or is he just speculating or thinking he knows everything? He said he knows Trump and his administration thinking, so. He seems to be speaking in their name. That is, to me, the big unknown now, and the only one. The rest is just being pushed back, and of course, it has an impact. It's part of what we are seeing right now in the markets. But I'm still not 100% out of whether what the tactics are there or the strategy is there, because we have seen earlier in the week or end of last week where he said, "Oh, it's all going to be okay," and then less than an hour later, Trump slapped tariffs on everybody. So, yeah, that's still my question.
Yeah, I mean, he does seem to be the one doing all the negotiating. So you'd have to think perhaps he is doing it with Trump's mandate, and I would suspect he's also the one who's been speaking to car firms and everyone else who are going to be impacted by Canada reciprocal, Mexico reciprocal tariffs. So he might just be playing the middleman between Trump and the others and doing the negotiating as well. But yeah, he certainly seems to be the good cop in this situation. Mr. Trudeau is probably happy that he's heading for the exit door because he's getting really ramped on by both Trump and Bessent. Trump dropped a truth bomb saying Trudeau is using the tariff problem to run again, even though he's not running again. He's gone as of Sunday, or as of Friday, whenever it is. Treasury Secretary Bessent said he's open to negotiating on tariffs, but not if you want to be a numbskull like Justin Trudeau. So he's not a big fan either. Loving all these playground battles going on. Ukraine stuff. The US is apparently looking for the Ukraine to reach a quick ceasefire deal to go along with the deal on minerals. Apparently Trump is demanding a tangible path to a Ukraine-Russia truce within this minerals deal. Trump himself says a lot of progress has been made with Russia and Ukraine in the last 2 days. I want to ask Kate, because I'm looking around. We've already had a bit of hopium risk trading on the fact that things are, people are talking, and even with the bad news and the stuff with Trump and Zelensky, we're still heading in the right direction. What are we looking at market move wise? Do we all pile into Ryan Mattel shorts if there's a deal?
Well, maybe not Rheinmetall, because they are going to get a piece of the pie of the German bazooka, right?
They won't need it, will they?
Well, they will still need
if
it.
there's peace.
I mean, I think they will still need it, because it depends on what kind of deal comes out of Ukraine, but it could be very bad for Europe. Huh? I
Yeah.
mean, if the way it's the way it is now, where we stand is that it seems that Trump wants to negotiate with the Russians how it's going to go, and he still hasn't sat down with really sat down. They went over there, Macron or Starmer or whoever else, but he still hasn't officially sat down around the table with let's say the four parties: US, Russia, Ukraine, and Europe.
Are we closer to a solution or resolution
I
than we've
think
ever been?
Well, I think
I mean, if Trump gets his
if I
mineral
hear
deal,
the
peace
way
should
I
be
hear
followed.
the way I hear Zelensky talk, he seems to be quite exhausted, and probably his people as well. And
Yeah,
that to me is probably a sign that he's ready to sign something. He has even been saying it. Now, the thing is, how hard will the Russians push for retaining the gained land, which is still the point where it goes, because if they keep, let's say, the eastern Ukraine part, that is where a part of those minerals and stuff are, right?
yeah,
So that's still going to be a big point of contention, I think. So that part of the negotiation, I think, is all but is very unclear. Now, if there is a deal and the deal is I don't know what kind of concessions Russian are going to have, but if it's not with land in that eastern part of Ukraine, then it's going to be a very positive deal for the markets. And but that point is extremely unclear. And what is Russia going to do right afterwards? Because they're not only in Ukraine, right? They are in they are regularly causing trouble in the Baltic Sea and in and yeah, even towards the northern part of the NATO line. So and then it's going to be a case of, I mean, if Trump negotiates with Europe, that Europe can send peacekeepers in there. That's not going to be of the liking of Russia either. So I think we're still not out completely of it, but the
yeah,
markets have been trading the positive side of we potentially have a deal coming here.
yeah, yeah. So,
But I think it's not completely done,
oh no,
There
absolutely.
still could be a very negative turn at some point. That's still
Yeah,
very, very possible. And that is the thing where I would say, if you're long euro dollar and or if you're long euros, and rightfully so, over the course of the week, it's been an absolutely great trade, and it's not a trade that is going to probably completely be undone so soon, because you've got also the weaker dollar side playing a role in there. But if there is any real negative news coming out of Ukraine, or Russia goes to the worst possible scenario, um, there could still be some negative for the euro there. So we still have to be cautious in everything we do here, market wise.
yeah, yeah. Oh, yeah. Bad news and risk will get an absolute bashing. We can be sure of that. But yeah, I think if we get the minerals deal done, then I think we are. I think that'll be the big booster, the next big market move, and then because should be a precursor for getting a deal done. So yeah, my own view, I think we're closer than we ever have been in the last 3 years, and let's hope they can see it over the line. You crypto mob of up in arms. There's a bit of flapping going on because Trump has established his US strategic Bitcoin reserve. He's put through his executive order. However, he ain't going to be buying Bitcoin anytime soon. The reserve will be funded by Bitcoin seized in criminal or civil asset forfeiture cases. I can't remember if it was someone on here on Twitter who asked me that question. Where would the crypto come from? Exactly that. So he's not going to be buying crypto at this point anyway. It's not going to be like the SPR, the oil reserve. They're not going to buy it when it's cheap and offload it when it's expensive. So it's basically just becoming a storeroom for Bitcoin, and that's disappointing a lot of the crypto mob. Bloomberg have a little heads up for the jobs report saying they may be hit by government and weather disruptions. So that's what their thoughts are. So let's move on to that quickly. It is double bubble today because we've got Canada jobs as well. So if you're trading the loonie, you need to keep an eye on that data too. But, you know, a lot of focus on obviously the NFP today and what it means for the US. So even with the Canada jobs data, the US jobs data is probably going to trump it overall. So we're expecting, depending on where you're looking at, somewhere in the region of 160,000 jobs. That'll be a nice solid number on its own. I think anything on expectations today will be seen as a positive. The market is looking for bad news. If it doesn't get bad news, it's going to go the other way, i.e. we're going to see some dollar buying and whatnot. So they're the numbers. 159k unemployment rate expected, if I can find it, my eyesight's going, expected to stay unchanged at 4%. As always, keep an eye on the participation rate after you've seen what the unemployment rate has done. Obviously, this one here is going to be the number everyone's going to be looking at, the government payrolls, to see if there's any wonkiness coming in there. Wages expected unchanged at 4.1%. They've not ever strayed too far from that 4% mark for quite some time. So how do we play this one today? Okay, well, we know where the unknown is. The unknown is in this government number. Okay, if we get 100,000, 150,000 non-farm payrolls, but we get minus 200,000 government jobs, you're going to see, or sorry, let me rephrase that. If we get private payrolls coming in 142, 150, and we get government payrolls coming in minus 200, you're going to see a negative non-farm print, okay? But the market may initially move on that in the first instant, but it will know about these government jobs. So it will look at the private number, and the private number being a positive 140, 150k is what will swing the market, okay? So if there is bad news, but the bad news is government driven, don't go with it, okay? It will be faded. It will go the other way. So that's the first thing I'll say about this one. Secondly, overall, the market is looking for bad news. So even if there's no government impact, but we get a soft number, the market's going to push the dollar lower. Euro dollar is probably going to be through 109 or up at 109 if it's not there already. Probably the best trade that I'm looking at is that we get strong numbers. Properly strong numbers, and we get a dip in the euro dollar because I don't think this move is for changing just yet. There's probably still plenty of people who've been caught out with this move who are looking for any dip to get back in or to get out of dodgy positions where they've been caught short. You can see that in the price action. I said it on Wednesday. I don't expect the euro dollar to be dipping too much. I expect it to stay supported. The best we could do under 108 was down not even as far as 107.60. And now here we are making new highs. And look at that. We're at the top of the zone and can't get through for the moment. So I think dip buying is still the way to go for this one. So that's going to be my preferred move. Strong number on the data, buy a dip if there's a half decent one in the euro, add to my longs and see where it wants to go after that. The market may be pausing a bit here, even though we are up new highs. It may be pausing. It may just be waiting. If there's nothing tragic or nothing, that's going to make the Fed hike or anything like that, then this might just be waiting for the data before it carries on motoring higher. That's my view anyway. Kay, your thoughts, mate?
Very good report. Sell a dollar rally. A normal report. Sell dollars. And a bad report. Hammer dollars. That's about where the mood of the market is. And again, as I've been saying over the past few days and this morning as well, I don't think there's a lot that's going to change the mood in the market right now, unless there is something that is happening or a comment or a decision where we need to buy dollars again. Can it correct? Yes, absolutely. We have gone relative well. Yesterday evening there was a bit of a dip in the euro dollar and a bit of a rally in the dollar, but it was extremely short-lived. So that still gives us the mood in the market. And is it ready to change? I'm not sure on a Friday. We have seen stupid things on Friday, but that was not in the framework of the political situation as well we are in now. We can't forget that on trade, on tariffs, etc. And also, Ryan, and I will show it a bit later. We're on quite important levels in S&P is turning around it, but then the Nasdaq as well, and get a blow through those levels, it make it ugly. And then the and it's been talked about on Face as well, because the Americans and the correlations that we've seen in the past was for if stocks go down by dollars and because it's kind of a safe haven. This picture or this correlation does not work today, and I would like to repeat that, because if it's starting to change correlations, if correlations started to change, it is important to notice it, right? And it's important. I mean, people who are buying dollars because the stocks are going down, they're getting burned these days because something has changed for the US assets right now. And so lower stocks, if this Nasdaq breaks down, it's probably going to be another negative for the dollar, and that may come on a bad report. But therefore, and therefore, I join what you say. Keep an eye on those private data, and if they show a weak one, then you may see a bit of a cycle coming in the US stock markets.
Yeah, absolutely. And we've got Mr. Trump out saying he paused tariffs to help Canada and Mexico. Isn't he kind? Isn't he kind?
Nobel, I mean, we've got already. I mean, that's another Nobel Peace Prize candidate, after Putin, Trump, and and next one is Xi going to save the relationship between North and South Korea, and then we will have like really 3 very, very strong candidates for the next Nobel Peace Prize.
Yeah, maybe they can share
for good order's sake. I'm joking.
It'd be like when you win a football trophy playing Sunday League football. You get the trophy for 1 week, and then someone else gets it for the next week. They'd all share the trophy for it. Anyway, so that's the data anyway. For the euro, while we're still on it, if we do get above this zone 108.70, which we're bang on at the moment, big figure 109 is in a lot of people's targets. 109. 35.40 is probably the bigger level above that 109. We've been around there quite some time in the latter part of last year, mid to latter part of last year. So that's going to be a potentially big level. And then obviously up at the 110 is another big level, which one of my, I think I've got one of my red ones. Is it one of my red ones? There we go. One of my red ones. So one of the 4 or 5 big levels that we get in the euro. So that's something to keep an eye on there. But I think and I'm going to use my old phrase, where we close today is going to be important. If we are closing above 108, 108.30, maybe even 109, 870, let alone 109, it's going to put a real bullish, more bullish scale on this thing. But if we're down below 108, then we may have a chance of seeing a decent top getting put in around this area. Doesn't mean we're going all the way back down to 105. Just might mean we get a dip further back, maybe 107s, something like that. So trade over the data as much as you want, but just keep an eye on where we're going to finish the day. We'll have a quick look at the Canadian jobs just to see what's expected, because even so, these have been very, very strong numbers of late, K, out of Canada. And we're expecting another 20K to pop up, and it's consistently, well, the last few months, it's consistently beat expectations. As you can see there, green, 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 green. These expectations all around the 20, 25K mark, and they keep getting blown out of the water. Or are we due a bit of a turnaround?
Well, I don't know. I mean, I think there have been very good reports, because sometimes on the turn of a year, you see a bit of a hike, then give back, and we haven't given back much. I Mm, I don't know. You see, like last year, you got those January data, then it's zero creation after the December creation. But now we are on a string of better numbers. I think with combined with the delay in tariffs, obviously we have the uncertainty. So over the weekend on those elections also, but Trudeau is out. It's been widely thought about in the markets as being relatively positive for Canada, because nobody has any confidence anymore in him. It was already starting before this whole tariff saga as well. And if you get another good unemployment report today, it could be, that the Canadian dollar is strengthening a bit further. If you take the dollar CAD picture, perhaps, Ryan, if you have it, 142.70 on the dollar CAD. Pretty easy level to monitor. We stopped right on there yesterday. Yeah, we had a little blip below, but then we stopped there. It's the bottom end of the range. It's a really decent fib. 142.70 is your number of the day in the dollar Canada if you trade dollar CAD.
Yeah, absolutely. And we can probably go back to, trusting the tech a bit more in this one, because obviously we get all this stuff, tariffs and tariff chat, but now we've probably kicked the can for at least, probably 2.5, 3 weeks. You can probably go back to relying on this range a bit more. That's something I'm going to look at. Obviously, we're very close to this level with this big data coming, so bear that in mind. But if we see a quick data-driven move underneath, but it comes back above pretty quickly, I might think about playing this range again, mate.
Yep, and there's an interesting line just under there. Where is that? 142.40? The one under the white line, just under there. Call it 40.45 or so. If we break below 142.70, and there's a bit of a, I mean, it's not a trick or so, but look at that secondary level, because if you break a level, you go onto the 142, 40, 45, the first spike on a good number, and then you start to go up again. It's probably no use to be very short. But if you break 142.70 on the data, which could be, algos move very, very quickly, faster than we even can. But if you then break that secondary 142.45 and stay under there, that's probably going to be the signal that the move is going to go deeper, and then you probably add another 100 pips to it down to the low 141s. I always like to have a confirmation level under or just above or just under the big levels, and this one looks interesting.
Yeah, I think that's as price action goes. That could be a very, very important marker. That move yesterday, busting through that level, like you say, it's given, like you say, a safety net. If we get another move, if you get a test of that level there on whatever the data is, and it holds that one, that is as damn as good a signal as you're going to get to look for a bounce back into that, and you don't need to bet the farm on it either. So
No,
yeah,
it's
good spot,
actually
mate.
correct. If you look at the other side, and you get a move down there and it bounces, your stop loss is as clear as water.
Yeah, yeah. It's no different to what happened on the top, really. We got the break of
Just a
the
bit
zone,
wider.
got up to that level at
Just
145.50s,
yeah,
tested it
just
twice. That's
mm,
what you want to see down here again.
mm,
If you see that, then you know what to do.
mm.
So yeah, good eyes, mate.
Yeah, and
Right.
I mean it's always nice to have. It's like when you do the job reports, and especially here in the Canadian one, you look between the balance between the part and the full-time jobs. Well, here you have like a kind of you have the big level, and then you have that extra little thing. Is it viable or not, the move? And that's your secondary level, which is going to tell you whether that move is viable or not. I think we lost Ryan.
Oh no, no, I'm here. Sorry, I was just
Okay.
getting the screen ready. I'm going to pump it over to you. You can take it, the rest of it for the rest of the day. All yours, mate. You're on mute now.
Sorry. Yeah, I'm sorry about that.
It's Friday. You let off.
Oh man, thank you. Been talking about this little range here. We are in gold. It's respecting it 29.30, 28.90. And it could be decision time today. I would say, you know what, it's going to be probably decision time if the number is really crap, because then we're probably going to go back up. If the number comes in as expected, just a little thing, Stelios always reminds us that Friday is sell-off day in the metals. Well, don't be surprised if we see another move. But I think on a crap report, which would bring yields back down as well, you're probably going to see this spike again. By the way, I just saw it like a couple of minutes ago. Is that Chinese central bank has perhaps has um, upped their gold reserves again for a fourth straight month in February. That's another interesting one. I thought they might, but yeah, it just gives us an idea that they are still, globally speaking, in markets, which probably makes the long term still very, very, very bullish in right now. But yeah, that little range good enough to hold on to, and I would say the break levels is the prior high. Get above, we're probably going to print that 3K after all. Get below here, I think this one maybe, but I think rather here around 28.60, that's going to be a bit of a break zone if it gets there. And again, you have a secondary zone under there. But it's that those are the wider levels, 28.60, 29.55 or so. That should be accelerators if we ever break down, or stop the move dead if we go up or down. Silver still doing a little bit better, but I haven't got too much to say about that. Um, Again, here, if we continue to move up 33.40, I think silver is still, if the EU pushes through with all those reforms, it could still be an outperformer compared to gold. As I said so many times already, silver needs a bit of a better environment to thrive compared to gold, of course. Well, euro dollar, you've done it already. Cable, we yeah, we tagged that 61.8. We're still trading around there, give and take. I think here, um, it's good. This is a daily, okay? If we start to hold above this 129 and a quarter, the next one 129.65, confirm that. I guess we're on our way to a move into the 130s, and then we have levels here that you can hang on to around 130 and a half, which is not going to be too far from this trend line, which is a bit of a fragile one, I admit. But the next level would be 130 and a half. On the downside, and euro sterling is bit, okay, because of the euro. So cable, same thing as many currency pairs now. If you look at the dollar side, the dollar pairs, most of them, maybe not so much the yen or Swissy at times, Most of them have been laggards because the market has been trading a stronger euro. Okay, so all of them have been laggards. Sterling cable not an exception, but I would say we have to look at levels well below this 128.90. This could be like just a quick blip as well over data, but look at low 128s, high 127s for it to hold. If we see this kind of move here, and I said on a bumper report, why not see a 7/10 or a percent move on the dollar? There's been already a lot of dollar trading going on, and it's probably not going to be any different this afternoon. We could see a move down here, and I really wouldn't rule it out. Back down somewhere to the 200 DMA. It's Friday as well, okay? So don't underestimate the potential of moves. But I would think that in current context, the mood versus the dollar in the market should somewhere, if we see a decent dip, drag it back up. And there is the same thing as Ryan was saying on the euro dollar. I'm also looking for dips because the mood in the market is what it is right now. Now it's about the same on every currency pair. We are in this downtrend. We are turning around, but even trying to break this channel here on the dollar yen. And then we are talking about that famous 147. If that breaks this afternoon, we're probably going to need another 150, 200 points to the move. It's bearish. There's no other way of turning this. It's bearish. If we get a surprise or a surprise, I mean like a beating report. I got a little bit of difficulties to see how we are going to print 250K, for instance. Um, but there could be, since the yen is volatile, we could see a move back up in the low 149s. And there I would now look very carefully, monitor very carefully what we are going to do. Because back through here would mean like a very, very good report and people may rush for the exit. But I do think that any move up closer to into the 150s is going to be met with sellers. Just one quick look on some crosses, and I've been saying the commodity currencies have been laggards. We are trading above that August spike high here in Euro Aussie. Okay, it's I'm not going to counter trade this for the time being. This shows Euro Aussie, Euro Sterling, Euro Kiwi, you name it. Those things show how strong the euro is right now. So we could have a bit of a setback here, but for as long as we are above 170 and a half, I think this still looks bullish. And point of no return is probably going to be somewhere in the 169s. If you get back below there, it's probably a reversal. If we get back below 170, 30, 65, we have to think about it may be a failure up here and then trade a bit either more sideways or get that break. I don't know yet. But therefore, there must be something really positive, for instance, that could drag Aussie and the Kiwi much higher, and the Kiwi is trading. So yeah, the last thing I wanted to say about this is, if this break holds, we could be on our way to 175, 177s. Okay, and Euro Kiwi is doing exactly the same thing, but the Kiwi is doing a bit better than the Aussie these days, but it's also breaking, and but we are on the 78% of the 2022 decline. So this could be a bit of an interesting one. For this to turn around, break back below 147, 4060, that could mean the end of the story and we go back down. But for as long as this holds above this 187 and a half, it does look similar to Euro Aussie, very, very bullish. Euro Swiss, Michael, that's a bit of a beast, isn't it? We've broken everything. We amended everything. So we've broken everything. We mended everything. It's even like gone very, very, very positive. This is sorry, the reflection of the risk that is now in markets, and we are back under this level. Top side 95, 95 and a half. 95.60. We are not too far away, Michael. No, 70. We call it rather 70. We're not too far away. It's also been a bit of a high here around 95.82. So that one. Downside, if we break below 95.10, that means more risk off. Okay, I think that would mean more risk off, and then you will see the yen pair strengthen and all Swiss pairs strengthen probably. Last one I want to show, we are getting closer. Okay, I think this is, as I've been saying, this Nasdaq here around 19.75, stretch it to 19.5. This is a nice one to look at, to have that secondary level we've been talking about earlier in the show. Stretch it to 19.5 perhaps, because we could have a bit of a fakey and then bounce, and it's been a level that's traded in the past as well. So you got 250 pips here. Very, very, very important zone. That in case we would get a real crap report this afternoon, watch what's happening on the Nasdaq. The S&P is much closer around danger levels, but the Nasdaq, if that breaks, then I think there's going to be more damage and more people are going. That would mean that more people are doubting the Trump administration strategy right now on tech and whatever. And don't forget, yesterday in that report, the tech sector is looking at potentially cutting more jobs as well. So be careful with this level in the Nasdaq. I think it is monstrously important. With that, Ryan, back over to you.
Thank you very much, Mr. K. Lovely stuff as always this week. And that brings us to the end of the week for the Flow Show. And as always, thank you to all you viewers, listeners, and whatever for coming and supporting us here and keeping us going through these hard times and busy markets. Hope you've all had a good week. Don't go and play it all on a Friday. Have a great weekend. Catch us on Face, where we'll be covering the NFP stuff and everything. Thank you, everyone. Have a good weekend.